Hey everybody, what is the difference between a bank and a credit union? We asked that question in part 1 of this series, and let's continue that discussion. Now, as you may recall, we recently did some videos per follower request on check endorsements and who has to endorse a check. Those questions came from videos on the stimulus checks. Well, to follow that up, people are asking how they could cash their checks and if they needed a bank account. Well, then came questions about, should I open an account at a bank or at a credit union? And hey, what is the difference between a bank and a credit union? Well, if you're ready to continue that discussion on the differences between a bank and a credit union, then stay tuned. To continue our discussion on what is the difference between a bank and a credit union, let's go with interest rates. Interest rates? That's right. When you're looking for a loan of any type, it's always best to check both your local bank and your credit union. Seriously, shop around and get the best loan rates you can in the best conditions you can. This can save you so much money. Now, in many cases, you'll find that credit unions offer the lowest interest rates on loans, such as a car loan or a mortgage. Not always, but usually. And as for interest rates on savings products, you'll probably find that credit unions offer higher rates than banks. Again, it can vary, but typically the credit union is your best shot. It's also worth checking online because banks, they may offer lower rates, and compare those to other lenders that you're considering. Isn't it awesome that you can do all this online? Before the internet, yeah, those days that exist, this wasn't possible. I saw earlier this year from the NCUA, that's the National Credit Union Administration, that they were using data from the S&P Global Market Intelligence, and that's data that they regularly compare interest rates for savings deposits and loans for banks versus credit unions. Now, this can and does change, but in the March 2020 data, it showed that credit unions posted higher interest rates on CDs and money market and savings accounts, and lower rates on most home and car loans. Okay, another place where we can see a difference and save money, that can be when it comes to fees. Yeah, fees. Remember that banks are in the business of making money, so they must make money for their investors. And one of the ways that they do this is that they tend to have more and higher fees than credit unions. Many credit unions offer checking accounts with no minimum balance and no monthly service charge. Some banks do too. Many banks offer that free checking, but free checking accounts at banks usually comes with some stipulations, such as minimum account balances, or that there are requirements for additional account types like maybe mortgages or even having credit cards. Again, not always, but sometimes. Then there are the other fees, like the fees for errors, such as a bounced check or overdraft. These tend to be a little higher at banks. But again, shop around and see what you find because it can also vary widely by location and by what options are being made available to you based on where you are located or you're shopping or where you're banking. And your location can make it to where you want more online services. Well, that's another area that the banks and credit unions can differ at least slightly. Because when it comes to online services and technology, larger banks tend to have more money to spend on online services and technology, like a lot more money. And as a result, they are known for adding technical services much more quickly than credit unions. I recently saw an article that said approximately how much they spend. Get this, a recent study from UBS on US banks' tech spending, well, Business Insider reported that JP Morgan, the highest spender, has an $11.4 billion technology budget. That's actually up from the $10.8 billion they had the year before. And Bank of America was second with $10 billion. And Wells Fargo came in third at $9 billion, and Citigroup with around $8 billion. Now that was a 2019 article I got that information from, but those are some super huge numbers. And that is why things like mobile banking services are likely to be a little bit more advanced at those bigger institutions. But it's possible to find national credit unions with digital banking options that provide most of the services, if not all, that you need. If technology and online banking are key to your choice, make a list of what you must have and ask for a demonstration of them before opening an account at a bank or credit union. While the credit unions, or in this case, even the community banks, may not have the exact thing that the big banks do, they do have comparable options. And they're usually more than willing to show you what they have works just as well. You may find that due to the rise in what we call FinTech offerings, they are offering similar, I'd even say in some cases, superior products. But people then ask, is it safe? Yes, apps are safe. But is your money safe? Yeah, keep my money safe. See, keeping your money safe is another key area, and this is one that it's a draw. You see, accounts in banks and credit unions, they are actually insured up to $250,000. Banks are insured by what we call the FDIC, and credit unions are insured by the NCUA. If you have more than $250,000 in deposits, you need to talk with your customer service rep to see what options are available to keep your money safe and insured. Sometimes it's a matter of having multiple accounts. For example, a checking account and a savings account. Each will qualify for insurance up to $250,000. But again, talk to your customer service rep. And that brings us to yet another area. I guess the question now is, how is customer service? Customer service can be critical and key if you ever have to use it. Larger banks may be subject to or are known for bad customer service. Now that's really just a matter of opinion. But let's just say, would you rather talk to a person or an electronic operator? And it wasn't long ago we saw one of the very large banks, they went overboard on fraudulent customer charges and they got fined around $575 million for it. Wow. I'm not saying this was the bank's fault, as it was possible it was just some bad actors that were working within the institution. But the big banks, they do tend to be a little bit inflexible in their customer service because the rules are not set locally, but are nationally created rules that everybody has to follow. They all have to follow those rules for all their account holders. Whereas credit unions and community banks in some cases look to serve their membership and tend to be more flexible when it comes to their individual customer needs. The credit unions, they vote regarding customer service issues and they are influenced by the account owners. The members of the credit union are those account owners who have equal voting rights. Also, credit union membership is smaller and better known to local branches, which helps facilitate establishing relationships. They know your name and even can play into loan decisions. They, in many cases, will know you by name and not just by your account number. Because of this unique relationship, it can make it easier to get things like a loan when you're closer, iffy on qualifying. But I do have to point out that some banks make consumer outreach a goal and a priority, and you may and probably can find very good personal services at a local bank branch. It is definitely not unheard of for a bank to also offer exceptional customer service. I've personally experienced good and bad with both credit unions and banks. A lot of that can depend on where you go. As we have heard, when it comes to real estate, it can be all about location, location, location. Hey, what about location? Yeah, location's another key factor. Major banks have many more locations to provide direct service to customers. Some of them seem to be everywhere. I have to say, as someone that travels a lot, this is something I do like. And because credit unions tend to be in much smaller towns and cities with fewer branches, they aren't everywhere. Or are they? You see, to offset this, what could be perceived disadvantage, credit unions have formed what we call co-op shared branching networks. And this is where they work together so that you can have access to your credit union through another credit union wherever you go. It's not exactly the same as being at the exact same credit union, but it's certainly close enough. Okay, it's time to wrap this all up. The bottom line is this: credit unions will likely offer you lower cost services and better interest rate options for both loans and deposits. Not always, but usually. While banks will likely provide more services and products, as well as more advanced technologies. Again, not always, as FinTechs have helped to certainly level the playing field. But I see it as this: you need to take factors of what's important to you. You need to do your research, your homework, and look into things like fees, services, customer service, and location, plus more. Then take all of that into consideration in deciding which type of institution will best serve your needs. Sure, there's a lot of differentiations between a bank and a credit union, but at the same time, they seem to be the same. Which one is right for you? Well, again, that's something you're going to have to decide. Another decision you need to make is whether or not to go over to our YouTube channel and hit that subscribe button under Payments Professor so you don't ever miss a class or a video. You can also go to the paymentsprofessor.com website if you'd like to see a full course. We're here to help electronic payments professionals like you succeed. And if there does happen to be a video that you would like to have made, maybe a specific topic you're looking for, you can leave a comment on YouTube. You can send a message here on LinkedIn, or you can email me, kevin@paymentsprofessor.com. We are here to serve and to help you, and we do so by making education fun, entertaining, and engaging. See you in a future class.